The office market, we've all heard this story. It's been, hit the hardest, throughout COVID. You're starting to see it come back a little bit, but there's still a lot of hesitancy there. People trying to figure out what to do with it. You hear a lot of times about people talking about repositioning office, where they're going to turn them into multifamily, or maybe low-income housing. Having spoken with a lot of developers, really it's much more difficult in practice to do this than it is, just strategically. For example, one developer that successfully did this in Long Beach, he told me, for every 100 office buildings, maybe one of them has the right kind of floor plate and structure to um, be positioned in a place where it can be repositioned to multifamily. So easier said than done in this. And it always costs more and takes longer than you think. For example, this developer, the cost was 25% higher than he anticipated originally to convert an office building to a, a luxury apartment building. So, having said that, the office year over year in LA down 9.2%. Really, a lot of people are still hesitant to touch, downtown LA offices. Just, it's been a real struggle the last couple of years, and that is still continuing here. Cap rates, we're seeing in that 7.7% range. Price per square foot, 322 bucks a foot, which actually seems high. You hear a lot of deals going through where there are transactions that are taking place at price points lower than what they were purchased for, you know, 5 or 10 years ago. So I'm actually surprised to see it this high in LA. Orange County, uh, 15.9% increase year over year, 8% cap rate on average, and $252 a foot. Um, Again, average prices here, it's going to vary depending on Class A, Class B office product, age, location, all of that. Is it functionally obsolete? A lot of the groups right now are if you're looking to move your headquarters and take advantage of lower office rates, you're trying to move into a higher end office and level up and take advantage of some pricing now. Uh, Inland Empire in office, 14.5% uh, sales volume increase year over year, 8.9% on the cap rates, and 193 bucks a foot. San Diego, look at this. Again, have to dig in further on here and see what caused this. Was there some large transactions that skewed this, but up 121% year over year in the office space, and average cap rate 8.3% and 286 bucks a foot. 3.5% transaction volume as a percent of total addressable market, which is a pretty high number.